Understanding how to read charts is essential for effective cryptocurrency trading, as it provides insights into price movements and trends. Charts typically display the price of a cryptocurrency over a specific period, ranging from minutes to years, allowing traders to analyze historical data. The x-axis represents time, while the y-axis represents the price of the cryptocurrency, with each data point corresponding to a specific time frame. Candlestick charts are commonly used in cryptocurrency trading, displaying price movements as candlesticks, with each candlestick representing a specific time period. Each candlestick consists of a body and wicks, with the body representing the opening and closing prices, and the wicks representing the high and low prices during the period. Green candlesticks indicate price increases, while red candlesticks indicate price decreases. Analyzing patterns formed by candlesticks, such as engulfing patterns or hammer patterns, can provide valuable insights into market sentiment and potential price movements. Volume is a crucial indicator used in conjunction with price charts to analyze market activity. Volume represents the total number of cryptocurrencies traded during a specific time period, indicating the level of market participation. High volume during price increases suggests strong buying pressure, while high volume during price decreases suggests strong selling pressure. Traders often use volume indicators, such as volume bars or volume histograms, to visualize changes in trading volume over time. Volume can confirm the strength of a price trend, as rising prices accompanied by increasing volume are considered more reliable indicators of a bullish trend. Conversely, declining prices with high volume may signal a bearish trend reversal. It's essential to compare volume levels with price movements to validate signals and make informed trading decisions. Additionally, divergence between price and volume trends can provide valuable insights into potential trend reversals or continuations. Learning to interpret volume patterns and understand their significance is crucial for accurately assessing market dynamics and identifying trading opportunities. Traders should also consider other factors such as market sentiment, news events, and fundamental analysis, in conjunction with volume analysis for comprehensive market analysis. Practicing chart reading and volume analysis through observation and backtesting can help traders develop proficiency and confidence in their trading strategies. By mastering the art of reading charts and understanding volume dynamics, traders can gain a competitive edge and improve their overall trading performance. Remember, while chart reading and volume analysis are valuable tools, they should be used in conjunction with risk management strategies and a well-defined trading plan to maximize success in cryptocurrency trading.